The third quarter earnings season is upon us amidst the slowdown concerns and slacking demand. What's in store for India Inc., especially for the consumption pack in the third quarter? I got up with Naveen Kulkarni and Gautam Duggad for their estimates for the upcoming quarterly numbers.
If I were to look at the consumer segment, so let's talk about, let's say, Hindustan Unilever, right? So that's the bellwether of the sector. So we are expecting a 3% volume growth, which is slower than what they reported in the last quarter, which was 5%. So sequentially, Hindustan Unilever, we are expecting some bit of decline because there are also tactical reasons. The winter onset was little late, right? So those factors could have had some impact on the quarter. However, overall for the sector as such, if I were to combine the discretionary as well as the staple segment, there should be some improvement that we should see on a sequential basis. So the QOQ basis, there should be some bit of improvement coming in. Second factor is that there is some bit of increase that we are witnessing in the raw material prices, right? So palm oil prices are up quite significantly, crude is up, right? So that means the input costs are up. Not everything will get reflected in this quarter, but that will also mean that the companies will start taking price hikes, right? So going ahead, we should start seeing improvement in the nominal growth rate, right? Also, rural market should start faring better as we get into this part of the year, right? Because of the Rabi crop sowing season was pretty good, right? So I think overall from a growth perspective, the whole consumption sector should start doing better. Even the staple segment should start doing better, and the kind of outlook that Titan has given, this was the quarter where the base was very high for Titan, right? So the retail sales for Titan jewelry segment was 15%, right? That too on a base of more than 35%, right? So from that perspective, I believe that the worst seems to be over for the consumer sector as a whole. We are seeing some bit of improvement to come in. How much catch-up it actually happens remains to be seen, because the price versus the value equation is a challenge for the consumer sector. Apart from that, we are seeing some bit of improvement coming in.
Sure. Wanted to discuss a couple of other sectors as well. And, you know, we've been talking about IT, while TCS, of course, has delayed their earnings for obvious reasons. But Friday, you're going to have Infi reports its numbers. A seasonally soft quarter, Gautam, for IT. But again, can we expect maybe mid-caps or large caps versus each other to perform a little better? Or would you say largely it'll be a very muted, sedate kind of quarter?
Ayesha, we've been positive on IT, and the recent global geopolitical events plus overall risk of environment has made us more positive on IT. The performance as far as this quarter is concerned is going to be similar to the trend that we've observed in the last couple of quarters. You know, 1.3 to 2% kind of a constant currency organic growth, 7-8% profit growth. But IT offers you a very strong island of defense. It's not as expensive as consumer. And similarly, the earnings visibility is not as low as something like a pharma, which used to be a defensive at one point of time. So anybody who's looking to add defensive, IT provides a very ideal bunch of stocks. So we have added L&T Infotech in our model portfolio. We've replaced Tech Mahindra with HCL Tech, where we are more positive. And Infosys continues to be the anchor of IT in our model portfolio. So I remain quite positive on IT. Also, in 30 days, you will see a budget being presented. Depending on the fiscal maths of the government, I'm sure the currency will react, and overall global environment does make one believe that currency depreciation is around the corner. So all things are falling in place for IT at this moment, and valuations, while not cheap, are not exorbitantly expensive like some of the other defensive sectors. So this is where we are more positive, and we have increased our weights further in our model portfolio in this preview.